Good afternoon. My name is Michael. It's really great to be here with you guys today, and I'm super excited to have an opportunity to share what we've been doing for the past 17 years now with our time cycle software. And just so you know up front, we're going to be looking at the applications which are available for NinjaTrader as well as TradingView. So if either of those two platforms are able to help you and suit your needs, we're super excited. Again, lots of excitement here to work with you. And just want to load up a TradingView chart so I know that I have it going forward. The name of our company is backtothefuturetrading.com. And if you've had a chance to check us out, we've developed a really divisive reputation online as either being the saving grace for many traders and or being considered by the uninitiated hokum and junk, and there's no possible way it could work. And so we focus predominantly on this idea that there are ways to predict what direction a market will move in the future. And one of the ways that we try to silence the doubters is by publishing the times that markets are likely to go up or down in the future. For example, this E-mini S&P 3-minute chart, when it loads up here, you'll see that we've been waiting 6 days for potential moves in this market. If you'll allow me to direct your attention down below, you'll see 6 days ago, this chart was published to the internet based on the programs that I'm going to demonstrate to you here today. So all of these times, 357, 457, 603, 639, 736, and so on, these times were estimated by the software 6 days ago to be potential selling points. And then 6 days ago, the software was warning us to look for movements up at the times on the bottom of the histogram. So the ability to look forward in time is kind of interesting in that if institutions and banks have a plan before we ever get here, then it changes the game completely. The rules that we were told were the rules are not, in fact, the rules. So we're going to look and see and compare what actually happened at those times. I have the E-mini S&P, for example, on here. Let me clear off my drawing tools and pull that histogram back up. And what I want you to notice, this is my E-mini S&P 1-minute chart on NinjaTrader. What you're going to see is that the software is divided into basically, I think, 3 unique sections. This line right here I've drawn is where we are in time right now. So the dotted line is where we are right now. If we were singing a karaoke song, this is the word we would be singing in the song at the present moment. The signals to the right are the behavior patterns that we're waiting for in the future. And so the ES is a 24/7, a 24/5, 24/6 Sunday, trades Sunday to Friday. And so we have these times waiting for us now on the right-hand side, and the software is estimating 624, 647, 712 as potential down moves, 601, 637, and 659 Eastern as potential up moves. So these times are waiting for us in the future. And you can see if I scrunch up my chart, we can scroll forward into the future, and I already have the times on a 1-minute chart for tomorrow. All of our times are sitting here, and it's important to note the fact that none of these times repaint. They do not recalculate. They do not disappear if they were wrong. They do not appear after the fact. These are all the tricks of the trade that other vendors use that are skilled marketing machines. How many of you guys have come across skilled marketing machines and fancy influencers who have all sorts of instant history? You see them come online, and then they have this sort of instant track record that appears from the ether, right? And they have a very compelling story, and you get locked into that story, and you realize 4 to 6 weeks later, oh my God, I did it again. How did I do this again? I can't believe I fell for this one more time. And so we take very extra precautions to make sure you guys know that what we're telling you is real. Whether or not it worked is a story that we're going to review here today. So none of these things are happening on the right-hand side of your chart, right? So that's what's happening on the right-hand side. Over on the left-hand side is sort of the track record of what we were expecting. Hey, Michael. Hi, George. Hey, John. I just see your texts there now. Sorry, I overlooked it. So down below, these were the times where we were waiting for things. It's in the past now, but it was in the future. In the same way 824 is waiting for me, 144 was waiting for me. 116 was waiting for me. And so it's important to realize when I show you what we published almost a week ago, those were times and directions that we were waiting a week for. Okay, now here's where people inevitably melt down. And I want to address the elephant in the room while, besides me, besides the heavyset, middle-aged, bald guy, one of the things people run up against mentally at this point is, but there are news reports. But what about inflation? What about the trade deal? What about these things that were announced between these 6-day-old forecasts and today? And so there are two schools of thought. I lost internet when I started talking about this completely. So I went to the backup satellite. I'm sorry it took so long to cross over. I have two Starlink dishes here, the mini and the full-size V3. So it took me a minute to cross over. I'm really sorry. Accept my apologies. It took so long. So cool. So two schools of thought. The first school of thought is we all have access to the same information at the same time. The market is fair. There's no manipulation. I can use standard indicators, price action, volume, order flow, all of the things to watch it in real time and react in real time. School number one. In which case, things like tariff announcements and trade agreements and those kinds of things, who knows what's going to happen? Unemployment, GDP, Federal Reserve policy. Then there's school number two. And this is kind of where we fill in a gap. I believe, there's nothing random that happens at a global political financial scale. I don't believe JP Morgan is surprised when the unemployment report comes out. I don't believe Goldman Sachs didn't know when the trade agreement announcement was about to be released. I think there's, for lack of a better phrase, a cabal of financiers, political, financial juggernauts who feed information downstream to, for all intents and purposes, dumb money, retail traders and the like. And by the time you hear about it, it's already happened. They've already positioned themselves, or the news is even geared in a way to position you to absorb the things they want to sell or to drive down the prices of things they want to buy. That's what I believe. And I've seen this now for 16, 17 years in this company. So if we look at this chart, at 116 today, we were expecting a down move. At 144 today, we were expecting a down move. At 206 today, we were expecting a down move. 136, we were told to look for an up move. 159, 220. One down move next is 231. The up move is 242. And this is sort of a record of the things that we were told to watch for and expect. Right up to and including the 414 signal that's on my screen now. So this is right now. This is what's expected based on patterns that are occurring lately. And then this is sort of an archive of what actually happened. And where people sort of lose track of it is, well, did these times mark where the pivots actually were? No. These times were the future times that we passed through. The first evidence that this is happening. And when we look at the times on the ES today, we're sort of seeing tops and bottoms are forming around these times. Okay, is everybody with me right now? Does anyone have any questions? Okay. Now, what's really bananas, just checking in to make sure everything's okay. Somebody type the letter Y if you can still hear me. I don't want to go unless I know you can still hear me. Cool. Thank you for that. What we do to ameliorate your concerns, right, is we publish the data beforehand. So for example, the NASDAQ 1 minute chart, this was added 6 days ago. The CEO of Screencast would swear on a stack of Bibles that these blue and white and black and gray pixels were published 6 days ago. Paul, GoToWebinar doesn't let people chat with each other. There is a Q&A box. And if I pull it around here, I want you to see there is an actual Q&A box, but I don't have any way to share it. GoToMeeting Citrix will not allow me to let you guys interact with each other, which is really weird, but I don't want you to think I'm doing it malevolently or maliciously. If there was a button, I swear on my children's lives, I would push it and let you all tell each other dirty limerick jokes during the webinar. I don't care. So Paul, right here on my chart, yeah, I can see your questions. I see everybody's questions and responses. You just can't see each other's. So when we look at these times, and when you see there's a signal here at 9:31, this signal at 9:31 was published 6 days ago. This signal at 9:55 was published 6 days ago. This signal at 10:22 was published 6 days ago. So everything you're seeing on my chart, we've already passed through all of these times that were on the internet 6 days ago. So from a perspective of credibility and authenticity, I want to just sort of plant that flag in the ground and say, I'm really irrelevant from this point forward in the webinar. There are these things that were established. They haven't changed. They haven't updated. They haven't repainted, disappeared, appeared later. These were the times we were waiting for, the directions we were waiting for almost a week. What's happened since then? There's no guru involvement. There's no charlatan sweet talking. I'm just a guy moving through the signals with you, right? We could train a monkey to do this part of the webinar. I'm just reviewing and seeing what's going on here. Okay, so when we're looking at the NQ signals over the course of the morning and the afternoon, these were in the public record. The monkey review would pull huge numbers. I agree. So there's something very curious going on here, because the signals on the NQ 1 minute chart seem to be forming tops and bottoms at these signals, right? And then it's not just today, it's last night. And then we also have the times. Here's the European session and the Asian session. And here's the cool thing. This was yesterday during FOMC. This was yesterday during the FOMC report. And so we could come back and I could sit here with you and say, for Wednesday, the 1 minute NASDAQ predictions or behavior expectations were carved in stone. And here are the times: 342, 345, 313, 342, 345, 313. Right? So how is this happening? How are we able to look at these times and anticipate what to expect at these move times? A lot of it comes back down to the fact that no one believes us, and banks are pretty sure that you don't care. Banks are pretty sure that you have bought lock, stock, and barrel this lie, right? This lie that markets are random. Now, here's the signals for the E-mini S&P 5-minute chart. These are the ones I generally review. How do you trade these? How do you trade these signals? Well, I build an extra level of accountability in to this presentation by telling everyone who's looking at us potentially wanting to sign up exactly how we're going to trade the signal times when we get there. And so if you'll give me a little bit of rope here, and I've done this every week for 17 years, more or less, we will be showing how the signals can be traded using one of two simple entry rules called signal with trend or the puncture trade. Signal with trend or the puncture trade. Our max volatility stop of 1.5 ATR will be used. So I want you to think about this from a credibility standpoint. And it's important because you're never going to trade something you don't really trust. And you'll never purchase something from someone you don't trust either. And so what we've done is we've essentially said, here are the times and directions in advance. And those things are predicted 6 days into the future. When we get to the actual market, 6 days forward, this is how we're going to trade the signals and keep track of whether or not they were profitable or unprofitable. Well, what are the rules? What did that video describe? And I'll introduce a few more rules if you're adventurous. But essentially, here's what we were looking for. And there's not a lot to it. Let me show you what I mean. Come here and erase all of this stuff. And I'll show you what a signal with trend or a puncture trade is. Okay, get rid of this. If our 120 period moving average is rising and we get to a time that's expected to be a buying move, an up move on our histogram, right? If we get to one of these times that we've been waiting for, the software is going to put a dot with a line that is 1.5 values of the average true range away. Now, can you make it fixed? Sure. You can make that 10 ticks, 20 ticks, 50 ticks, whatever you want. We believe in what's called a dynamic stop loss. As the market volatility increases, your risk and consequently reward potential increases. As the market volatility decreases, your stops and targets get smaller. It's generally, I think, a better way to look at markets. So this 1.5 ATR gap between the low and the close, the low of the candle and the dot is there as our stop loss. So we'll put an S there. Our entry, let's say this is a high close candle, is here. Stop and entry. Now, every signal that has a beginning has an end. If this is a signal with trend, or what I have put my big brain towards and come up with this beautiful acronym, SWT, what we're looking for now is to see, at least in this experiment, how far will it go by the next sell signal, which has its own stop line. So we're going to measure and see if we buy at the close of the buy candle in the direction of the trend, that's our only filter, how far do we go by the next potential sell signal time? That again is 6 days old. And that's called a signal with trend. When we get here, this is a counter trend signal. We don't use it as an entry in this example. We use it as an exit. My thinking is that what if the candles don't go down? What if they continue, in fact, to go up? What if we get to the sell time that people normally have been selling at the last several weeks, and they abandon the position, right? My dad came home from working at Pan American in New York. We lived on Long Island in a small post-World War II boomer house. And it was an hour and a half, 2-hour commute to JFK and an hour and a half, 2-hour commute back home. The traffic was horrendous. And when Dad usually came home, he was in a bad mood. What can you imagine our reaction was on the days he came home in a great mood where he wanted to spend time with us and who wants a barbecue tonight and let's go for a walk around the neighborhood? We would be looking at him like, where's my real father? Because you're not him. Something's different. Well, in this case, as a trend trader, we want to see if the people who normally sell have abandoned their post. And if it keeps going up, I'm going to have a buy stop sitting one tick above the stop line of the sell signal. Because what that means is if they go through here, the people who normally sell are gone. They're excited about this up move. So I use that level as a buy stop or another entry. If this candle penetrates that line, my new stop for a puncture trade is just underneath whatever candle punctured the stop of the sell. So a failed sell with trend equals a buy signal. And I call that in the video a puncture trade because we're puncturing the stop of the sell signal. The people who are normally standing in our way are gone, potentially. So that's a puncture trade with trend. There's one other signal that I mentioned, and that's called a crossover. So if this starts out as a sell, and let's say they actually do start to come down, and the candle crosses over the moving average and closes below. It's now a signal with trend crossover variant. We've closed below the moving average. This signal said it was a sell. We're on the right side of the Mason-Dixon line. Those of you familiar with American history, we're in the South. My stop now goes 2 ticks above the candle that crossed over. My entry is the close of the crossover candle. And now I can hold it until the next buying signal, which is counter trend that we're waiting for a puncture of. So there's 3 possibilities that have been outlined in the rules before we ever got to the times. Now, why is this important? Because we all know from books like Trading in the Zone by Mark Douglas or anecdotal stories that we've heard, our personal experiences, that trading psychology is the make or break factor. And again, everything I'm about to show you doesn't care about me, my personality, the way I'm talking to you. It's going to be facts, numbers here in 1 second. But if there are 2 ways to approach markets, everyone in this room loses their minds when they trade. You move your stops. You cut your targets short. You revenge trade. You get in the same trade over and over and over again. I do it, used to do it, still do it sometimes. You have 100 million voices in your head. Get in, get out, stop. The RSI is climbing, the MACD is lowering, the VWAP is above us, support and resistance is below us. And it's this cacophony of psychology because we're reacting to something. We're like a monkey on the African savannah and there's 100 lions underneath us going, ah! This way seems to imply that we are proactive, waiting for the signals in the future. We know exactly what our risk will be. We know what direction to wait. We know how long that move is expected to last. There's no room for improvisation. And so it's like walking into a haunted house around Halloween and you know what's in the rooms before you get there. That's Bill. He's got a chainsaw and a couple weird things. That's Marty. He's in there with a bat covered in red paint. My girlfriend's in room number 3. That's a happy place to be. You sort of removing these elements of surprise. It's psychology. But this seems to imply, hey, when we get to these times, this is what we're going to do. So let's pretend we work for an investment fund and our job is just to do what they told us to do. And let's come over here and see what we have to do. At 8:45, after the report comes out today, we have a long signal. 8:45 is above the moving average, above, and then it closes below. As soon as it closes below, the signal with trend rules say, I got to get out. So I don't even hit the full stop, but it's minus $3, $150 potentially, hypothetically, per contract. Now that I have closed below the moving average, this candle right here drives through the stop line of the white dot. Somebody started to buy, and then they said, guys, let's get out of here. This thing's going to fall. They covered their shorts and let the next wave come in. But I have a plan for this. It's just like this, but in reverse. I even drew a diagram of it. So what do? We have a sell stop sitting right here. And those of you in the room with me today in the live trading class, you saw us take a couple punctures. Okay, I have a sell stop sitting here at 648.25. The line is at 648.75. I'm 2 ticks under there. Where does my stop go? I have a rule before we got here. It's a puncture trade. So this is now a signal. The people who normally buy are gone. In my worldview, that means JP Morgan is doing something different. They're standing aside and letting the market fall when they normally do what between 8:45 and 10:45? They normally form higher highs. They are not doing that today. I am robbing a bank where the guards are all on break. So here's my entry. How long do I hold this trade for? Based on what I just told you from the video you had beforehand. I hold the trade now from 8:45 until 10:45. That's my job. That's what the investment fund owners want me to do. Does it come against me a little bit? My stop is here. Enter, exit, 10:45. That's an $11 move. Yeehaw. What's happening at 10:45, 6 days after the forecasts were published to screencast? The program is saying, hey, I've studied the historical data for the last several weeks, and they usually drive price down now. Doesn't actually say that, but that's what the signal infers. And this one's kind of cool because the maximum favorable excursion is $35. But for the purpose of this experiment, I finish with about $3 in profit. Now you can say, hey, I would have put a trail stop and I would have put a trail stop over each one of these candles and I would have followed it down all the way to here and I would have got out there. Great. I don't get that latitude during a webinar. No one lets me do that because it's not in the rules before the webinar started. But you see at 10:45, someone pulled the rug out, it broke a new low and dropped down. What am I waiting for at 12:35? Normally at 12:35, it goes up until 1:20. I'm watching now people through my screen. Are you going to do it again? Jamie Dimon, what did you tell your crew? Deutsche Bank, what are you guys doing? Are you going to do it? Are you going to do it? Michael Jordan, are you going to throw the three-pointer or are you going to drive it to the basket? What are you doing? I'm watching your feet. I'm watching your hands. And I'm waiting for it to close above the moving average so I can take a crossover trade. It does not do that. Oh. Well, if you're not doing that, what are you doing? Oh, puncture trade. Right here. Where does my stop go? My stop goes above the candle that punctured the white line. They're not selling. They're going, not today, or they're not buying, forgive me. Hey, Jamie, what are you doing? We're just taking profit. They're in here and they're covering some of the shorts that they started driving over here. And the market just kind of wiggle waggles in what's known as a redistribution phase. In fact, in the histogram guidebook that I've included as an attachment, you'll actually see in a downtrend, when we get to a buy signal, you see right there how it just kind of goes sideways for a while and then continues to drop? It's like they're pouring water on a raging fire. And further below, you'll see here, when the market is falling, we get to a buy signal, and this is called a redistribution phase. It goes, and then it falls again. Well, that's exactly what happens. This book is almost 10 years old. So we get in, where? 2 ticks below the line. When do we get out? At the next signal. Can you hold it? Can you trail it? Sure. I don't get to, because the rules that I published before the webinar are these rules. I would love to do the shuck and jive games that vendors use, the really fraudulent ones, the really dishonest ones who say, we had a contract in here and we got short here and we held it forever. I made $48 million today on the secret monitor nobody can see. I use market replay in my YouTube video to prove that it was real. Okay. This rule existed 6 days ago. I'm short and I get out at 120. That's a $6 move. Put my winners up here, theoretically, and my losers down there. 120, that's a signal with trend. Matter of fact, let's just write it down. I find that seeing it on the screen is visually compelling. Signal with trend. I'll put a P for puncture. Signal with trend. P for puncture. and now signal with trend. 120 comes along, what do? Well, in this instance, I have a blue dotted line that is 1.5 ATR values away from the high of the candle. I enter on the close of the candle and I hold it until when? 2 o'clock. $33 move. Okay, cool. 2 o'clock, I have a sell stop waiting for me down here. It never goes through that line. 2:15 comes along. Guess what? A signal didn't work. And it comes up and hits the stop. I give 20 of that $30 back. Womp womp. 3:15 comes along. Signal with trend, no puncture. And I take $16 of that and put it in my pile. So just for reference, what did we do here? The program is based on the second belief that there is a group of people who have a plan going into the session each day. And they already know when they're going to do the things they're going to do, proactive versus reactive. Those times were published indelibly to a website, so I could say to you with credibility and certainty, these were the signals the program generated. When we passed through those times today, a moving average helped us filter what to do when we got to those times. We were not watching every bar. We were not watching every tick. We weren't watching the dome flashing. 1300 minus 12, 1200 orders, 500, 300. That's Las Vegas crazy. What time is it? And at the end of that, after the econ, plus 11, plus 3, plus 6, plus 33, plus 16, minus 20, minus 3. Which way would you rather trade? Right? Which way is it easier to manipulate? On the daily time frame for the E-mini S&P, I wanted to show you this. I'm using default values if you're going to ask me, the 714.00 swing strength 8. What was the signal for today on the daily time frame? It was a sell signal, July 31st. What was the signal before that? July 9th. When am I supposed to exit? Now. How about a call here? If you're an options trader on SPY. What was I supposed to do with the signal from June 18th? You have a buy right there, a call. At what price? 61.96 quarter. How long do I have? Until July 9th. What do I do here? I can trail it or get in again, and now I get out. Tomorrow, there's going to be a blue line up here. You could put a stop over this and see if this is going to go down now, because we have a sell window between July 31st and August 18th. The market we follow week to week is gold futures. Last week when we got together, or 2 weeks ago, you saw the signal. The signal was July 24th. The one before that in the webinar I did with you guys live was July 7th. The signal before that was June 16th. And so now, these were the times we've passed through. These are the times we're looking for in the future, the dates. I mean points, Kelvin, sure. So the program was warning us, hey, JP Morgan, Goldman Sachs, Deutsche Bank, everyone in the Trump administration, all the former Biden people, Jerome Powell and his dog got out of their gold positions, I believe, I can't prove it, July 24th. For how long? Till August 18th. Where are they probably going? Here's the fun part. If they're going to buy on August 18th, I believe they're about to run the stops at that swing low. I believe they're about to run the stops at this swing low. Wherever we are within a day or two of that signal, they're going to cause a liquidity event. There will be news telling us that gold, they found it on a comet, on an asteroid. It's practically free. Nobody needs gold anymore. It's worthless. And everyone will sell it the day or two before August 18th, right before it flies back up. Well, how far is gold likely to go on August 18th, you ask? Well, measure how far it went historically at the times those behavior patterns were created. 192, 134, 291, 250, 108, 145. So it looks like somewhere between $100 and $150 potential move. So wherever we are on August 18th, there's a likelihood that we'll move at least that far. Again, let's say they trip the stops down here. There's a good chance, just looking at the data, that between August 18th and September 8th, gold moves about that far. That's a different way to look at trading. That's a different way to trade. We presume there was a plan in advance. Just like when we hear the day after Marjorie Taylor Greene made millions of dollars on the announcement of the Trump tariffs. Marjorie Taylor Greene, Trump tariff stock trade. And yes, Nancy Pelosi does the same stuff. Right before he said, just kidding, no tariffs, Miss Greene lays out millions, catches the bottom, catches the very bottom. This is also on the other side. In fact, there are people who track when Nancy Pelosi buys a stock. She outpaces everybody. Pretty good. And now everyone says, hey, I think there should be a ban. And they vote for the ban, and then no one wants it, and they get rid of it. Right? And then even happens here, Berkshire Hathaway, Goldman Sachs, questionable, unusual activity. Remember this? With the meltdown, these guys did the same thing. Berkshire Hathaway after 2008, 2009, Goldman Sachs is at its lowest price, and there's rumors of unusual trading activity. We know this is happening, and we refuse to believe that that's the case. I wanted to show you something that's a little weird, if you guys will indulge me. Am I okay so far? Can I go out a little further on the branch, or is everybody kind of put up with me? Okay, I'm going to go a little further out on the branch with your permission. if you'll grant me a little more rope. This is weird, and if you don't like this part, just forget I ever brought it up. I have a degree in mechanical engineering. I wanted to study alternative energy before anybody ever thought solar energy was worth a hoot. I wanted to study wind energy before anybody put a turbine up. And I'm always interested in systems. What is the natural order of things? How do things work? My dad, because he worked at Pan American, we didn't have big bucks growing up, and that washing machine had to get fixed. And we fixed that washing machine year after year after year, replacing pumps, replacing drive motors, replacing belts. And I knew how a washing machine worked. When my predecessor was studying market movements, the guy who first started looking at time signals, he started noticing that markets moved in relation to natural law. In fact, when they interviewed Gann, a guy who was doing a lot of the stuff I'm showing you, there's this beautiful quote that emerges that confused me for a while. For years, all we did was the data mining, the stuff I'm showing you now. And I risk alienating some of you by showing you this, but I'm going to do it anyway. Gann has developed an entirely new idea governing stock market movements. He bases his trades upon certain natural laws, which, though existing since the world began, have only recently been studied. And I want to put this part out there too. And I've brought this up before, but it bears remembering because it can be an obstacle for you. Why don't people follow this, Michael? Why isn't this more acceptable? Richard Wyckoff, the editor, says, hey, we're going to show you all of this. But keep in mind, a guy with a new idea on Wall Street, which violates the traditions. What are the traditions of stocks, right? Ask somebody on Facebook, what do you think? Whipsaws and erratic activity and people shouting and pumping their fists in the air. Gann says, hey, what if we use science with regards to trading? Or in my case, engineering. Well, when you do that, Wyckoff says 100 plus years ago, when you introduce science, it's not usually welcomed by most traders because Gann is asking people to think and do research. And his opinion is, ask a trader to think and do research, and most of them hate it. They hate it. Give me a green arrow, give me a red arrow, tell me when to get in and get out. I've just summarized about 1,000 conversations I've had in 17 years with people. So this chart is Tesla on a daily time frame. Now, is it okay for me to say, before I tell you what the signal is, if there's a red signal, Tesla price drops usually. And if there's a green signal, Tesla price rises usually. Can I say that with what you're seeing with your own eyes and ears, hearing, tasting, smelling, touching on your screen? I don't know what you're doing. Is that a reasonable thing for me to say, or would someone disagree with that? Usually, most of the time, more than half. Sure. Can you see on the right-hand side of my screen, I have dates coming up in the future. Here, and here, and here, and here. In fact, in the upper right-hand corner of my screen, it's telling me with minute precision when those signals will populate the chart. Everyone's very quiet now, which usually means I've pushed you too far. Right there. 6 hours, 52 minutes, and 27 seconds from the next green cycle. Now remember, Gann, they use the specific words, natural laws. They use the word in the article. Laws of nature for his operations or trades. Operations was another way to say trades then. Every one of these signals is based on natural law. I'm going to give you the source code. Here we go. I'm going to paste this link into your GoToWebinar chat box, and I'm going to show you this in Tesla, and I'm going to show you this for Bitcoin. Can everyone see the link that I just put in there? Verify this on your own after the webinar, draw your own red and green dots. And what I want you to focus on is where it says perigees and apogees. And I won't get into the theory of this. I'm going to do a special webinar, I think, here shortly for that. But what I want you to see is that the dates are here. And what I'd love for you to consider is that on my chart, these are all the red dot dates. And on my chart, these are all the green dot dates. Now, just like the warp chart we were looking at, I'll show you Kronos for TradingView in a second. What's today's date? Today's the 31st. Do you see this signal here? I have them backwards. I need to flip it. Forgive me. If you cut me, do I not bleed? The very next signal is August 1st, which is here. And then when's the next red signal? Here. And when's the next green signal? Here. And when's the next red signal? Here. And so on and so forth. I can come onto this and look at 2026. And I have the red and green signals for Tesla for a year in the future. This is the kind of stuff Gann was doing over 100 years ago. And just like your head is exploding now, everyone's head was exploding before cell phones, before computers and calculators. All I know is this. You with me? Okay, now, look. Here's Bitcoin. Here's Bitcoin with the same stuff. What's going on? There's some force involved that seems to have an effect on humanity as a species. I was going over this with a Bitcoin trader. I don't care if you never ever think about what this is again. All I want you to think about is that tomorrow is the next green signal for Bitcoin. 6 hours, 48 minutes, and 11 seconds from now is the maximum apogee event. And we can get into the science of why this works. Okay? This is 100% entirely predictive. Completely. So whether we're coming at this from a data mining perspective Look, if I said to you we were doing something similar on this chart, you'd be like, oh, it's magical. But these signals are based on patterns in the historical data. There's no juju involved. There's no astrology, astronomy, none of that stuff. But if I just go one further step, it behaves the same way, meaning this washing machine has a drive motor, a pump, and a belt. This washing machine has a drive motor, a pump, and a belt. And the guy who figured that out wasn't just Gann. It was this dude. Banks know this about you and me. They know that you and I collectively essentially have our period every so often. And that's when the good news comes out. That's when the bad news comes out. They're leveraging a physiological feeling that we collectively have as a society. Nature was this way for millions of years. Indigenous peoples knew when to plant crops, when to harvest, when the tides would rise and bring fertile soil, when the dry spells were coming. And then right when we started making Fords, the Industrial Revolution came along, we all said, nah, it doesn't work anymore. And here we are. And it isn't just recently. This has been happening for a while. Let me load a little more data. It isn't just recently on Bitcoin. This has been happening for a while and will, in my opinion, continue to happen. Well, why aren't people paying attention to this? Why aren't they leaning into it? Michael, it's pretty compelling, seems pretty simple. There's the signals. I submit this webinar fully recognizing that most of the knuckleheads trading today, when they hear what I'm saying through the lens of a scientific viewpoint, don't care. Will call me a crook, will call me a snake oil salesman, will call me a fraud, because I'm asking them for 5 minutes to turn off CNBC, stop looking at their stock picks on the penny charts, and think. And nobody wants to do that. That's why. Same thing, different story. So when we come back and we're looking at these charts, we have a schedule for tomorrow. It's already here. It's already on my screen. These are times we haven't passed through yet. Those signals, Tracy, are universal to all stocks, right? I don't know how those particular lunar signals work on Goldman Sachs or Caterpillar or fill in the blank, NVIDIA, right? Could we just as easily change the signals here and load up 2 years of NVIDIA signals? I'm not sure how those respond. I just pulled those two together because I've been researching them. And now my computer is going berserk. Let me see if it loads. But yeah, if you want to learn more about that, you can email me. I'll walk you through the steps. For some reason, it does not like what I'm doing. But yeah, it's universal. It doesn't care about the instrument. So can you see here, Tracy, how I already have the times for tomorrow's E-mini S&P right here? These are times we haven't passed through yet. And so in the same sense of I had those forecasts available for us for Wednesday and Thursday, on my screen, I already have them for tomorrow. So yeah, let's come over and look at TradingView. It was acting weird a minute ago. I couldn't get the website to pull up. There we go. Oh, so here's my ES 1 minute chart. And there's just a few differences with Kronos as opposed to NinjaTrader. And those of you in my live class today, we had some really cool signals. This morning, you can see we took trades in the live room today, shorts at the signals with trend, getting in and getting out. And now moving forward. So one of the limitations for TradingView, because it's a web hosted platform, they limit the number of lines of code in the memory available to us. So Tracy, I can only publish 5 times in the future. TradingView has this weird thing where if it takes too long to calculate the indicator values, it will throw an error and not show anything. So we have to limit the number of future times to 5 or it crashes. True story. Those forecasts are available, Paul. If you want to, I'll put the link for that website, that web page, forgive me. I have them there internally as proof that the stuff worked. But if you want to have that there, we repopulate those dates I think every weekend for the following Wednesday and Thursday. It's not a secret. It's just the way. Can you appreciate how by having these and showing them that they were available ahead of time, that it would alleviate some people's concerns? Yeah, that's why I do it. But for Kronos, it's really cool because now we can do the same studies, right? We can pull up Tesla. We can look at a 1 hour Tesla chart. We can look at a daily chart the same way we were using the moon a second ago. And this is the guy that I was working with Tesla the other day. And now I have the same signals. Kronos is available to people using TradingView. We can look at everything from 1 minute charts to daily charts. So if we were looking at gold futures, for example, here's gold on a daily chart. And now I can do the same analysis on a 5 minute chart. So it's pretty cool that way. I like the web hosting aspect of it, that we can get all that historical data and do the calculations. And so TradingView has some limitations where, number one, I can't load more than 5 future times. But these times, again, never disappear, never reappear, never reload, never change. They're carved in stone and we're passing through them. But until TradingView adds more resources to its web hosting platform, that's as far out as we can push. No, the indicator I was showing you just then is called Orion, and on our website in the user section, it's from a package called the Alpha package. Yeah, I use that, Tracy, to show the predictable nature of markets. Once you see that, I don't want to get in trouble. What I've discovered, I've spent close to $50,000 on systems 20 years ago that didn't work or worked for a while, that someone came up with that was curve fit to what was happening in the market right then. I would then performance chase and get in after watching it work for a certain period of time, only to start trading it right when it failed. And then I would system hop to the next system until I sort of realized this isn't how washing machines work. The reason I'm showing the lunar signals is because they share the same attributes with Kronos for TradingView, with Warp for NinjaTrader. They are entirely predictive, a year into the future for the lunar signal. They have an oscillatory nature. It moves from buying to selling, buying to selling, buying to selling. They share the same pattern features. So Tracy, in your histogram guidebook, there are pattern 4s and 5s that appear on Warp charts, Kronos charts, data mining. Those 4s and 5s also appear on lunar charts, natural law. So all of these approaches seem to be obeying gravity the same way. Time seems to be the universal language, whether we're drilling into the well with data mining, these two programs, or drilling into the well through astronomy and force application, electromagnetic field deltas, if we go down that rabbit hole. They're all connected. And so for me, because they're tethered and behave the same way, I trust them, because the things we're seeing a man 100 years ago say he saw when he followed the system he observed, we're seeing 100 years later, anchors me where I know the performance won't change. I know this isn't curve fit. This is deeper. There's a book series I read when I was a kid. Have you ever read The Lion, the Witch, and the Wardrobe by C.S. Lewis, The Chronicles of Narnia? There's this great scene where Aslan is with the girls, and he's offered his life to the witch to get Edmund back. And they cut off all his hair. They're tying him up on the table, the stone table. And he turns to the girls and he says, there is an even deeper magic still, magic from before time. And for me, when I look at the lunar signals and the solar cycles and these types of events, and I see they're performing the same way, predictively, following the rules, oscillatory, to me that points to that deeper magic, that deeper mathematics, that deeper science, where time seems to now emerge however we approach it, with data mining or any of the other approaches. I have one other method that I use called vibrational analysis, the law of vibration. I find the resonant frequency of a market on the time frame I'm trading, and I have confidence in it because time is the foundation before the creation of the stone table, right? Yeah, and Tracy, that's fine. We're not going anywhere. We've been here 17 years, bro. I called you bro, sorry. So Kronos lets us do those same things. And whether you're looking at Bitcoin or Ethereum or any of those punctures and everything, it's still here. If you're trading Bitcoin futures, we still see the highs and lows. Remember, Gann said we were going to see highs and lows near the times. Highs and lows near the times. His observers said it was about half of the time when those highs and lows kicked in. And then we can jump out to a higher time frame, whether it's 1 hour, and see those same times that we've already passed through. We've already passed through those times. Here's the track record. And here are the times we have yet to pass through. So one other important note, why are the times different on different time frames? Time is fractal. Just like your fibs are different on higher time frames and lower time frames, the times are different on higher time frames and lower time frames. The accuracy is constant. It's in that 60 to 70% window of what we were expecting versus what actually happened. But some people prefer to look at a higher time frame. So how long are we expecting Bitcoin to drop? Until 9 o'clock tomorrow. How far might it move? Well, I can measure how far it moved at each of these locations, and I can now start to build a database, right? So I can come over here now and say, how far do banks drive the price down when they drive it down on average? And so check it out, Paul, I can come over here and I pick these lines like blueberries. It's like a harvest for me. Let's get it right up to the top of that candle so we can be as precise as we want. And there's usually a minimum, a medium, and a maximum. So how far am I expecting Bitcoin to drop by 9 o'clock tomorrow? Well, all things, we've passed through the median, and now I have these two lines right here, which would be a liquidity event right before 9 o'clock tomorrow. So if I'm buying Bitcoin and getting in and out, I would be watching for 115,800 to be punctured just before 9 o'clock tomorrow, and then a possible reversal back up into the highs. Isn't that a fun way to look at trading versus following every bar and listening to all these knuckleheads? Yeah. So Kronos is pretty cool too, and for people who are in that ecosystem. Any questions before we wrap up here? I know I went a little long here today, but I wanted to cover those things with you and help you see some of that stuff, have a little more confidence. Nice. Okay, how do you get it? Who are we? 5 minutes, here we go, ready? On the website, backtothefuturetrading.com, if you go to trading tools, you'll see there's two options, one for TachEon Warp, one for Kronos. Warp is for NinjaTrader, and if you click learn more, there are prices down below. Last year we started offering subscriptions for the first time. So you can come in for $4.95 a month. You can own Warp forever for $6,000. There's an annual lease for $3,000. There are live classes Tuesday, Wednesday, Thursday where I show executions. If you want to add that to your subscription, it's $700 a month. You can also have an annual Warp subscription with the live room where we show entries and exits. You're seeing my workspace today. Or have it forever for $61.95. Coming at it from Kronos, because it's a little weaker than the Warp program, we've discounted it accordingly. That program is presently $295 a month. We're going up to $395 shortly, probably the next 30 days. Again, annual lease, month, lifetime license. If you want, you can include the live room Tuesday, Wednesday, Thursday, where I look for a $200 a day goal in there, and annual and lifetime purchases available as well. Backtothefuturetrading.com, trading tools. Included with your purchase is access to a video training library on the website, as well as inclusion in our live Discord. These are customers that are in here every day using the software and teaching one another about the signals, how they enter, how they exit, sharing what they're doing and encouraging each other. So if that's something that you're interested in, that's available. We do have a Discord for our customers. And one thing that we're very proud of is our Trustpilot review. We don't control what people write. These are actual people who come in here and write what their experiences are. And so if you're interested in hearing what other traders who've actually paid for the software said, these are not my brother-in-laws, this isn't a bot farm. These are people with real phone numbers, real email addresses, houses, food that they eat, and credit card receipts that they paid. You can read what their experiences with us have been. I think we're a 4.7. We had a 1-star review from a guy who wanted a free trial after everything I've shown you. And apparently you don't even have to buy the software anymore. You can just leave a review if you've had any contact with the company. So Venkat brought us down. We were at a 4.8, I think. He brought us down to a 4.7, and was mad when I said, I don't think you have enough money for $295 a month. You should maybe not trade. And he said he was going to contact his attorney because I was shaming him. So please read that review and my response. I think that one's hilarious. But also the people who've had the program are leaving their experiences back for you as well. Why does the Lifetime have a monthly sub? Oh, that's the trading room. If you don't want the trading room, it's here. The trading room is $200 a month, $50 a week. 1 ES point a week. If you don't need that, come on in without it. Yeah. So if you get the $31.95, you have what is it saying? Software plus exclusive access to the BTTFT training room for, I think that's for a year. I got to clear that up actually. Oh, okay. So these are the annual, this is annual for Kronos. This is lifetime for Kronos. If you want the room on top of that, it's $200 a month extra. That's how they're wording it. So sorry. Yeah, these all include the software. If you want to have it for life, it's $200 a month after that. And I think if we hit this, it'll show that. Sorry that it's confusing. Yep. So that's the price of the annual, that's the price of the lifetime license plus 1 month of the training room. And that $200 will continue monthly forward in the future. Sorry, I didn't explain that very well. Towards the end of these, I get a little tongue-tied. Any other questions? Correct. Correct. Paul, one of the reasons why I can't offer the lifetime on the training is if I die, what happens? Right? If I die, my wife is in small claims court with somebody, and don't say they won't do it, because I've met the people who will, and you know what accent I'm going to use before I even use it to complain. I don't want to do that to her. So JV, the link to the Discord, do me a favor, ask Rachel for that. I think I know how to get it. Let me create that there and send it to you. But just in case we can do it this way, I just sent it to you. See if that takes you there. No problem, man. It's good to see you here today. I'm glad to see you in the webinars. That's pretty awesome. So, in conclusion, serious moment, classes are on. There's a different way to approach markets. That is reactive versus proactive, predictive versus reactive. We had these times available indelibly before the webinar. We applied the same rules we applied 2 weeks ago, using the same market that we track, the S&P 5-minute, the one everyone is watching. And today it was a ridiculous amount of money in 1 day, more than the lifetime license of the software. And so I can't promise you that every day, but I can tell you what the reviews all say. You're calmer, there are fewer indicators on your screen, You're spending less time in front of your computer. As I get older, I'm realizing, well, I'm not going to be here forever. I don't want to sit in front of the computer all day. Most of my setups are done by 10 o'clock. Between 10 and 10:30, I'm getting nervous, itchy, antsy. I don't like watching every tick. I don't like watching the dome. I don't like looking at the weird camel-shaped looking mark. All you need is market profile. Fine. Watch those little humps and bumps and read them like tea leaves forever. It doesn't work for me. My attention span is shorter as I get older. I want to look at when my setup is going to be here, go make a sandwich, walk outside, rub my dog's stomach. There are things I'd rather do than sit here all day. And I think this offers a way forward through that based on a signal, a system, a method that most people won't even consider because it forces them to think and do a little bit of research. If you're feeling compelled to move forward, there's a reason you're here today. I don't believe in coincidences. Everyone I've met, everyone who's bought this has found us in a weird way. And I take those appointments very seriously. May the wind be at your back. May the sun shine upon your faces. May the valleys rise up to meet you. May the mountains lay low before you. I believe you can do this. I agree with you. I encourage you today. I'm proud of you for looking at this, for opening your minds for a moment. You've learned something. Every day that you're learning, you're growing, you're moving forward. You're ahead of the pack, ahead of the 90% of people who just want an up and down arrow. You're doing great. I know you can do this. I believe in this with you, for you. Today here, manifesting, whatever you want to call it. I just am in sync with you right now. Whatever your reasons, whatever your motivations are, whatever charities you want to support, whatever retirement you're building, whatever your hopes and dreams are, I believe in them. They're good. They're good for you. I think you should have them. We'd love to help you get there. Have a great day, everybody. We'll see you 2 weeks from now. If you have any questions, Michael at backtothefuturetrading.com. And I'll even put my phone number here. If you want to text me, that's my personal mobile number. Please text first. If we're eating, my wife makes grumpy faces when the phone rings. So 336-703-7667. And then in addition to that, my email is michael at backtothefuturetrading.com. We'd love to have a conversation with you. This video will be available on YouTube probably tomorrow or Monday, so keep your eyes open for it. Don't forget to like and subscribe. And remember, the market you trade is not random. You can look forward into the future. You can anticipate when these moves are likely to occur. And you don't have to sit there and take the poop sandwich that JP Morgan wants you to eat every day. We write our own invitation to the party. We counterfeit our own name badge into the country club. It's not 100%, but it's more than enough, I think, to help you guys achieve what you're trying to do. Take care, everyone. Bye-bye.